How much of this do you think actually is the Reddit community unto itself or professionals effectively, I don't want to say taking advantage of the Reddit community, but riding on top of that momentum?
You know, so not too dissimilar from what I told y'all back in January. What this represents is just a secular shift in this intersection of community and capital. And so whether it's on platforms like Reddit or others, you know, retail investors have more connectedness, more information, more ability to trade than ever before. And this is going to be the new normal. And, you know, meme stocks, it is a charming name, but I think at the end of the day, you know, momentum investing is nothing new. And really, you know, the existence of people getting whipped up and excited about a stock has happened. You know, it's happened around barbershops. It's happened around bars. You know, retail investors have just never been able to sort of jump on an opportunity in real time. And this is what it's like in the age of ubiquitous social media.
Here's the thing, and I know I'm going to get slaughtered on Reddit and Twitter for saying this. Momentum trading, day trading, typically does not end well. Options trading, this is not how people get rich. I mean, some people do, but most people don't. And so I just wonder, in terms of how you think about that, how you think people are on Reddit should think about it, and frankly, how regulators are ultimately going to think about this. Because at some point, when you look at some of these things that are happening, and they are divorced from reality at this point.
I think, you know, there are a lot of people who are doing their research. I think anyone doing any investing should absolutely be making, you know, sound financial decisions, doing the research, et cetera. I just think we've crossed the Rubicon, and it doesn't matter one platform or another. This is how people are sharing content. They're able to open an app, you know, and execute a trade. And it's only going to get easier, right? It's only going to get more normal for a generation coming up with this. They don't have to, they're not even going to conceive of the idea of like calling a stockbroker or for a lot of folks, you know, hiring a professional. And so I think we absolutely need more financial literacy. I think there's a lot of stuff that a lot of other people have talked about for many years, and it's more true now than ever. But the thing we have to keep in mind is this is here to stay. And to your earlier point, yes, I do think there are absolutely professional investors who are paying attention to these trends and you know, putting dollars to work as well. I'd be naive to say that that wasn't happening as well.
If you are Gary Gensler, who runs the SEC, how should you think about this? If this is toothpaste that's out of the tube, what do you do?
I think, you know, there is a framework that exists today, and ultimately, you know, we have as a responsibility to ourselves, this sort of personal responsibility to do our diligence, to be smart investors. And, you know, I think, I don't know the ins and outs of the SEC's sort of responsibilities around this. Obviously, they want to protect consumers, but at the end of the day, you know, adults making adult decisions about what stocks to buy or sell is really up to them. But we'll see. I guess the one thing I'm certain of is that this doesn't go away. And if anything, hopefully, I think these markets become more and more efficient because more and more people are educating themselves, are engaging in trading. And I hope we're all actually, I think, better off as a result. But this transition period is going to have some quite wild swings, that's for sure.
Shepard Smith here. Thanks for watching CNBC on YouTube.